Hey traders, it's Chris. It's 2 o'clock on Wednesday, August 5th. I've had a few questions about figuring out measured moves. I've referred to it a number of times in the notes and in the videos. So I thought I'd put together a quick video on some of the common structures on how to figure out the measured move. I'll keep this video private for members. Um, I don't want to go to all the trouble of making, cover pages and all that kind of stuff. So here's a cup and handle. It doesn't really matter what the stock is, but this is Vale back in 2017, 2018. Really nice cup and handle structure. You've got a well-defined resistance level. Once you break that resistance level, it kind of triggers the formation. And the way you do it, if you've got a measuring tool on your platform, it goes from the bottom of the cup to the top, the resistance. And then from there, you can extend, roughly, 47%? There's 46.2%. And you can see, got pretty darn close. It took it a year, but it finally got there. And the thing to remember, on these measured moves, it's a projection. It's not a God-given fact that it's going to make it. But from a technical perspective, that's what the expectation is for a formation that you're taking a look at, and this is how you measure it on the cup and handle. Now, if you don't have this percentage tool, you can always, put yourself a line from the top to the bottom. See if I can grab it here. No, not going to let me do it. There we go. You can take a copy of that line and then bring it up and make your measurement that way. It's really important that you're using log scaling on your charts, because over a period of time, if you're using arithmetic scaling, it's going to get all out of whack. So make sure you're using log scaling on your charts. You can see here, the distance between 5 and 5.5 is a lot wider than, here between, 13 and 1350. That's the log scaling effect. So make sure your charts are always in log scale. So that's the cup and handle. Let's move on to ascending triangles. This is Marriott. Again, it's a weekly chart. It doesn't matter if it's, an hourly chart or a weekly, a monthly, a daily. It doesn't. All these structures are the same. You can see here a bottom off of the March of '09 lows, formed a massive triangle encompassing let's see, 1, 2, 3, 4, 5 years. This giant triangle in the making. You say, wow, that projects it, to triple, 287%. We zoom forward, and there it is. It's amazing how some of this stuff works. It doesn't work every time, and it, I had some of these collected in different files, so I didn't go, rooting through all the, a zillion charts trying to find these on the fly. But it just goes to show that, here you would have probably thought it unimaginable that you would get a triple after, all this time. But it did play out, and really didn't give you a whole lot of reason to get out of the trade. You might have gotten out, here or something, but it was pretty steady all the way up. So on an ascending triangle, You take the widest point, which is usually the beginning of the triangle, and you take that measurement and then project it up. And I don't have any examples of a descending triangle. Oh yeah, I do. I have it. I'll show you that in a minute. But it's the exact same thing in reverse. You have your support and resistance line. It goes from the widest point of the triangle to that support or resistance line, and then you make your projection from there. Let's move on. We went over this on the gaming sector review the other week. Head and shoulders pattern. Take your measurement from the neckline to the top of the head of the formation, and then from the neckline where that breakdown would take you. Somewhere in there. And it always helps to look left for structure. Does that make sense with, everything that's happened before? And, you can imagine coming back down here towards the lows if something happens. Right now we've had an initial breakdown and we're back testing that line. If it breaks above, it invalidates the formation. But if it moves down from here, that would be the projected move. The height of the formation projected from the breakdown level. And of course, you can also have the inverse of this. A cup and handle going this way in your neckline. On a breakout above, it would project higher, not lower. This is the traditional head and shoulders, and then you can also always have the inverse of that. I don't have any examples of that handy, but that's how you do it on head and shoulders pattern. Here's the descending triangle I was talking about. We've been talking about chef. We've got a descending triangle here against the level. This is the height of the triangle, and on a breakdown you would project it down the same amount. So that's pretty simple. On descending triangles or ascending triangles, it's the height of the triangle and then either down or up depending on which one you have. I'm a real fan of the box breakout. We've been talking about IWM. Anytime you've got a well-defined level, a trading range, in this case it's $5. Whenever you break above, you add $5 to the breakout. So adding 5 to 150, our measured move is 155. If this were a breakdown, you subtract the $5 from 145 and get 140. So whenever you've got a well-defined range, either a break above or below, you either add or subtract the width of the range. So those are pretty simple, but they're powerful, and they're powerful formations because price is telling you it's moving out of that long-standing range. So they're important to watch and easy to alarm. I really like finding those formations. And if you think about it, it's the same thing as really kind of the bracket trades that we look for on earnings. Break either above or below a range. You don't really get the measured move effect. But anyhow, whenever price moves out of a well-defined range, it's usually significant and something to pay attention to. Moving on to Costco. Before I get to the actual Costco formation, I wanted to show you, kind of how you would do a bear flag. Right here is your normal kind of bear flag formation, you have an impulsive drop down, and then price consolidates this little flag formation. You take the length of the initial drop, and then you project it down, and it would look something like that. Okay, so the length of the flagpole, here's your flag. You just take a copy of that line and bring it down like that. Now, if we were to go the other way, let me delete these. You know, your traditional bull flag would be something like, you get an impulsive move higher. Price pulls back and consolidates in a little flag. You take your line, the length of the impulsive move, you add it to the flag, and here's your target. So that's a traditional bear flag that we looked at a minute ago, and this is a traditional bull flag. Now, in the case of Costco, we've got a flat flag. It didn't come back like this picture. It was flat, and it was consolidating above support, above the breakout, which is good. That's what got us interested in the first place. You take the length of the move. That was the impulsive move higher. You take the length of that move and you add it to the flag. And the way I got 357 was I measured, from this 295 to 330. That's $35 added on to 322.50. And that gives you 357. So that's how you do it. I will polish this up and publish it down the road, but I just wanted to give you a quick little tutorial on how to do that. So when you run across formations, in your own chart work, you'll have a good idea how to do it. All right, thanks guys, and talk to you soon.